Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's the telephone number here. If you want to pick up the phone and give us a call, we can answer your questions about what's going on in the mortgage market, certainly in the real estate market. Buying season, selling season, all kinds of seasons here. I know if you have children right now and you've got to move, you're panicked because tick, 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 that clock's coming strong. August is when the kids go back to school, so you got to move, buy a house, get everything situated, kids in new school, all between, late June 2019 till, pretty middle part of August. So you got to get a hustle on. You probably have questions that you need answered, especially in the financing area. What I find is when you do that, you have a lot more ability to calm yourself down, enjoy a little bit of the summer with your children, and to be able to get the best possible advice out there. You need to shop around a little bit. We talked it last week on the show. I think it's good advice. If you don't have the time or the energy to do that, you can certainly call us here at the show, or you can always email me, info@malibufunding.net. Let's see. We are a lot of these shows. All of these shows are on YouTube, and they're also on KCAA, KMET, and our great friends up at K Tahoe. The show airs each and every week on all three of those stations, and we cover a great, vast area from up in Tahoe area all the way down to San Bernardino, Riverside, a little bit of Los Angeles County, a little bit of Orange County, and yes, you can hear us all over the place. But again, if you want to see us, if you want to continually look or get some research done on some of the topics we cover on the show, go to YouTube. My channel is Jeff Barton, the Real Estate Voice. And if you look that up, you will see hundreds of shows there. And each one of those has some terrific guests that describe the problems, the issues, what's going on, current market conditions. Current market conditions are pretty favorable right now. And given that what we have going on in the economy is odd right now. Is it self-inflicted? A lot of articles are pointing to yes, meaning that the trade war that we're having with China, the disputes that we have with Mexico or Canada or Venezuela or any number of other countries who we are strong trading partners with, that's a problem. And as goods and prices go up, the tax benefits that we received last year, or some of us received last year, have really disappeared because the goods that cost more eats up any tax advantage that you might have had based on the reduction in overall taxes. Last year, President's bill was a good one to stimulate the economy short term, which is why we had 3.2% to 4% GDP growth in 2018. But right now we're kind of hovering again in that space of I don't know, where are we going? And that makes some people nervous. Matter of fact, so many people are nervous that they're pulling money out of the stock market, trying to place it in other equities, whether it's the treasury bonds or whether it's the bond market in and of itself, and a number of other places. Real estate is always a good hedge. And what do I say by what do I mean by hedge? The real estate prices are going to go up and down. We all know that. They've been going up steadily for 10 years. They've slowed down somewhat in the residential market. Commercial real estate is a little different story. But real estate has always been a place to put your money. And the good part about real estate is that it's a hard asset. It is a real property as opposed to personal property, which you can pick up and take away, which means that you can weather any storm. Anybody that was around 10 years ago went through that mess, went through that downturn not only in the economy, but real estate prices tumbling across most of America 30 to 80%. Well, all of those markets have come back. All of those markets are seeing new highs. All of those markets are looking at real estate prices today that they've never seen before. Well, let's say 80% to 90% of those markets. Now that speaks to the American economy and the strength in the American real estate market. But it also speaks to the long-term strategy of real estate is a great investment. It's a great investment if, in fact, you're worried about what's going to happen to the stock market. Although it has gone up this week, I got to say that as the mortgage interest rates have kind of remained flat. They've risen a bit, some basis points here and there, but most lenders are adhering to the same not real estate, but mortgage interest rates that they had last week. And that is a good thing. And so I guess right at the top, why don't we do this? Why don't we just talk a little bit about the rates, because that's always of interest, especially on the Mortgage Show. And this is the Mortgage Voice. I'm Jeff Barton. Thanks a lot for tuning in. As I said earlier, let's see, the mortgage interest rates, 30-year fixed rate loan at 3.875. That's what we talked about last week. They did fall somewhat, and now they have come back up. But 3.875 is really a smoking rate. I know that there are some of you out there, and I had a friend who does work for Malibu Funding, the company that sponsors the show, and who I work for. Their NMLS number is 79620. But he was telling me today that the FHA Streamline is very popular. Now, what do I mean by that? What is an FHA loan? FHA loan is a loan that you can get for 3.5% down. Everybody listening to the show probably knows that, but few of you that haven't heard the show before or don't know much about loans, a government program called the FHA loan is allowing you to put only 3.5% down. And if you have a down payment assistance program, it's even less than that. And I know CalHFA is one here in California. I want to say, hey, again, to San Bernardino and Riverside counties, thanks for tuning in. Thanks for listening. So if you've got that FHA loan and you're looking at only putting 3.5% down. The good thing about that is that it's a very low down payment, right? The bad thing, of course, is that you have to pay insurance, because FHA allows credit scores, FICO scores they call them, down to 500. Now that's really low. That's saying that you have had a bankruptcy, you just don't want to pay your bills. There's FICO scores, credit scores only go from 450 to 850. So you are down towards the lower end, bottom of the FICO score if you have a 500 credit score. But it does not preclude you from getting a loan. Now, not all lenders are going to do that, understanding that FHA is a program, and those programs get sold once a lender lends the money based on the guidelines by FHA to Ginnie Mae. Ginnie Mae houses those particular programs. Now, the insurance can be, 1.25% per year on the loan, And what that does is it protects you, i.e., if you get into trouble and you can't pay the loan, the insurance does pay that difference between when you get foreclosed upon to what the property value is worth. The insurance picks up the difference so that FHA doesn't lose any money, and that's the purpose of it. That particular type of loan, down to 500, with those kind of protections, that's a pretty good loan. Well, a lot of people bought or got into that loan when interest rates were much higher. Like a year and a half ago, we were talking 4.5%, 5%. And at low FICO scores, let's say you have a 620 FICO score, which is low. I mean, your average FICO score, average credit score in America is over 700. And as I said, the top score is 850. So if you're in that range of the lower FICO score, you can expect, because most lenders will have what they call hits, or what do they call it? I can't even remember. But the vernacular in the industry is they're hits upon your particular rate. So if you have a rate of, 5.5% at a 700 FICO score, and now you have a 600 FICO score, you're more than likely to get a 6% rate. I mean, that's just an example. It's not what it is today, or that is not what it is today. But if you have a lower FICO, chances are the lender that's lending you the money is going to raise the rate. And the rate that they give you is going to be based upon that and your ability to repay. Those two things are the most important. So FHA Streamlines, which really take your particular high note rate and lower it, requires no appraisal, requires no income verification, is basically a rate and term refi. Now that is something that anybody out there who has a rate above 5% should be doing right now. It's a very low cost loan, and you should absolutely be the person to be able to get that done. If you need help doing that, call us. and we'll be happy. We'll go to the website, MalibuFunding.net. There are a lot of different people on that website that you can ask for your opinions as to exactly what it is needed and how you can get that FHA streamline. But the rates are lower, and that's a good way to go. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is our telephone number. If you pick up the phone and give us a call, we can help you answer any question you might have about what's going on in the real estate market. What kind of rate can I get on my loan? Is there availability for that loan? Can I get a property that I can afford? All these questions that you're going to need to answer, because guess what? Real estate is where it's at. You can have a lot of fun. It's a good time to do it. And we do it in many different ways and places in the United States. The company I work for is in 10 different states. And one of the states that they're in is Nevada. I was recently in Las Vegas, and joining us from Las Vegas, Nevada right now is Rebecca Fitzgerald, real estate agent to the stars. Rebecca, how are you?
Good. How are you doing, Jeff?
I'm fine.
Thanks for the introduction.
What's that? Do you like that introduction? Yeah, I thought so, yeah. Okay, so how are you, first of all? Pretty well?
I'm doing great. Summer's going well. It's been pretty, cool summer so far here, which has been nice.
Yeah, when I was out there, it wasn't over 100, so it wasn't too bad. You know, and 100 in Vegas.
And just for other people, 100 in Vegas is like 80.
Right, exactly right. I mean, it's cool. I mean, it's in the shade, you feel like you need a sweater almost. I mean, no, not really, but
it's just perfect.
Okay, tell us about what's happening in the real estate market before I ask you about your house flipping that you've done.
The real estate market has started to warm up. It really feels like it has a really slow start to the summer. Normally stuff starts heating up, March, April, but this month it really has picked up. I have a house listed, one of my personal houses that really didn't get much action last month. It's just I feel like I'm going to get an offer any day now. So on that,
right.
Yeah, and another client of mine is exact same pretty much situation. All of a sudden, just offer came in, so it's starting to start moving again. The prices are also, gone up since this time last year, but we have a little bit longer turn, 3 to 4 month supply, opposed to the 1.5 month supply we had this time last year.
I see. And is that due to the weather, you think, or is it just the nature of what's happening right now?
I think it's the nature of what's happening right now, because the Fed, has been doing some kind of screwy things to keep the stock market pretty much to stay stable.
Right.
Because there's no reason that the stock market shouldn't have more volatility, just naturally, which they've been doing a lot of screwy things with the Fed to keep the stock market stable, when normally people will kind of diversify their assets a little more, especially when people start hearing about new elections and things like that. People want to get their stuff out of the stock market and put it into assets, kind of they hedge against what could happen in the future.
Hey, have you noticed prices rising on products that people normally buy, and then having that spill over, i.e., I can't spend it on my mortgage because I'm spending more now at Walmart than I used to?
I personally haven't, but I maybe not have noticed, because recently I've started making a lot of my own products.
Oh, I see.
Most of the stuff on the internet is free information. It's not really that hard to put some coconut, milk or coconut oil and with some sugar and use it as a body scrub, different things like that.
Oh, no, I think that's a great idea. I was just thinking more or less what with the trade wars going on, because you had mentioned a little bit about what the Fed was doing. So I thought I'd bring up the trade wars that are happening with China and how that's driving cost of goods up, and then, basically taking money out of the ability to be able to pay that into a mortgage.
I don't know if that's the case. I personally haven't really noticed things like that, but I'm not the average consumer.
Right. Well, no. Based on what you were describing, it sounds like you're thrifty. That's pretty good. Most people are not. They're 2 Starbucks a day people, Yes.
I have an assistant, and part of her job is helping me save money to pay her.
Oh, that's excellent. Are you saving enough money so it's really a break even for you?
Yeah, exactly. It probably is. I probably am saving more money.
Wow, that's a great idea. Boy, you should coin that one.
Yes, there's these apps. There's a bunch of apps online that you can download, and they'll run. And I have her run the receipts, and I tell her she can have 30% of any money she saves.
Wow, that's really good.
So, and I give her tasks to do. She gets them done, and it works.
Okay, so this is a professional assistant, or is this a personal assistant?
Yeah, we'll use it for both. But yeah,
that's excellent.
She checks on properties, sets up photography appointments, things like that for me. So I don't have to run around town doing those things.
Oh, you know what? You're speaking to the choir here. I mean, I would love to have somebody do that for me, and I think a lot of people who listen to the show run around like crazy if they could figure out a way to...
It's so amazing how much just paying the person, because they're going to get so much done for you that you're going to save money, gas. It's just different ways they can save you money.
Right.
Like delivery fees and little things you can have them pick up small things instead of paying the delivery fee when they're already out working for you.
Right. No, I think that's excellent.
There's so many ways that if you really wrote it down and how much more productive you could be, that it's worth it.
Last week we had on the show, and we were talking about how people spend their money. And if you just did a few simple things like you just said, you write down what you spend and how much you spend, and you do that for a month, you get very clear on where the money's going.
Yes. Well, this one thing about me is that anytime I have to spend extra money on a month or whatever, I'm always looking for ways to save that somewhere else, because I to break even in that month. But
right.
If that makes sense.
No, it absolutely makes sense. And I think if more people did that, they'd be able to probably save enough money for a down payment on a house, or be able to afford the mortgage more.
Right. There's so many different things that people just, okay, whatever, I'm going to pay it. Like even as simple as making 1 or 2 meals at home instead of eating out all the time.
Right. I totally agree with that. Okay, let's get to the house flipping. How is that going for you? Give us an example of what happened, and then how much you were able to, I guess, figure into the sale once you sold the property.
Right now I have selling a property that I held long term.
Mm-hmm.
And I should make around $50,000, but I lived in the property at some point, so you have to pay to live.
Right.
And right now I have somebody staying there, so I'm not paying as much. Also, so when you're looking at a certain properties, if you sometimes could potentially hold them for a longer time, if you see that area is going to be a slower growth, if you can, and if you can make some money, pay the mortgage in the meantime. And you can hold the property for two years. You avoid paying certain types of taxes.
Right. It's the long-term capital gains.
I think you're right. So I think on some situations, if you can hold property, sometimes that actually could be a beneficial thing towards flipping the property.
Yeah, I like the long-term hold strategy as well, because I don't want to pay short-term capital gains either.
Exactly, and a lot of times that if you can, it's better if there's really small, numbers that you're working with in the original numbers. If you were to just immediately flip it after 3 months.
Well, right.
The strategy is you just put a tenant in there and hold it for a year.
Yeah, no, I agree with that, and it's a successful strategy. What's the market like out there for flipping right now?
It's still going well, because there's obviously Vegas is late to the gentrification thing.
Yep.
So our downtown is really is diversifying. There's a lot of young people that really want to live close into town. They don't want to live in suburbia. So that's just everywhere. And right now in Vegas, that's happened a lot slower because it took us a long time to catch up after the recession.
Right.
And so now I feel like it's our time to now gentrify. So there's a lot of old houses that really have been kind of neglected. A lot of the flippers just wanted the properties that were from the early 2000s to put $10,000, quick makeover, and then try to make $20,000-$30,000. That was mainly. But now a lot of the properties are really going to have to put in $50,000-$60,000 to really do a quality job, and they're really older homes for the $50s.
Right, but they're a little bit cheaper, so the margin could probably stay the same.
Their margins probably would stay the same, but not a lot of the flippers really have they don't want to put out the money like that.
Oh, I see.
Because a lot of them don't really have money. They're just trying to leverage everyone else's money.
Yeah, I know. That seems to be.
I come across a lot of them a lot. They're just, they're ready to squeeze every single nickel and dime. And
Right.
I mean, I get annoyed. I don't really like working with like all those kind of people that like, because you need to have a healthy budget for mistakes.
Right. Exactly. Hey,
And not just do a crap job and then pass it on to the consumer because that doesn't look good.
could you shout out your phone number for anyone who's looking for a terrific real estate agent in Las Vegas?
Yes, my phone number is area code 512-923-3489.
Rebecca, thanks very much for coming on the show once again, enlightening us about what's going on in Vegas.
All right, thanks, Jeff.
Thank you very much. And that's Rebecca Fitzgerald, real estate agent, and I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929, telephone number over here. Pick up the phone, give us a call. We say it every show, every segment. You have problems and questions in real estate, you need to talk to a professional, somebody who really cares about the outcome for you, not just the bottom dollar in their pocket. And that is me. That is my company I work for, Malibu Funding, Inc., who sponsors this show. And it's really important to understand that having you come first is not just a slogan, right? I mean, yeah, we can do a lot of things, but the main thing we do is try to look at what your situation is and give you the best possible advice to get from here to there. And that I can't say about everybody, but that is what we do. There are a lot of solutions out there in the marketplace right now and a lot of new and innovative products coming to the market. For businesses, I know some of you own businesses, you need money, you have capital requirements, you want to grow that business, but you're not quite sure how you can do it. With us again today, Reed's been on the show many times, Reed Blake from Business Capital Experts. And welcome, Reed. How are you?
I am terrific, Jeff. Thank you very much for having me back.
Thank you very much. Always appreciate you coming on because solutions that you offer for people who need money, that's really important. So let's get right to it. What do you do and how can you help?
Well, one of the things we do for the real estate investor is we solve their skin in the game issues, the cash requirements bring to the table. And so we're able to take care of the down payment. We're able to take care of the earnest money. We're able to help with the rehab costs, that initial draw, closing costs, and the reserves. And we use two vehicles to help clients do that. We do unsecured cash-based business lines of credit and unsecured cash loans. And again, they're unsecured. And so the client can deploy that capital in any way, shape, or form that they choose. And we just guide them on how to do that. But we have a ton of success helping people meet their skin in the game requirements.
And usually these are business loans for people who are in the flipping business or in the buy and hold strategy. What kind of customer do you look for?
Well, a great question. Both, actually. Just the funding sources that we use would depend on what they're trying to do. But obviously, flippers are make up a big portion of the real estate investors that we use because they need those things. In other words, they may have secured their own hard money source or soft or private money, but they've still got to come up with their down, whether it's 25% or 10%. They've got to have that 6 months of reserves, that interest-only payment.
Right.
They typically, have to stroke the check for their earnest money, got closing costs, and, not all the time, but the majority of the time, the hard money source says, we'll cover up to 100% of the rehab costs, but they require the investor, as you know, to put the money up first for that first round of rehab, and then submit a draw sheet that they reimburse.
Right.
But you have to have that money up front most of the time. So those are the 5 areas that we help, and we do the unsecured cash-based business lines of credit, the unsecured cash loans. They can deploy it how they choose. If they want to buy and hold, we do have funding sources for that, both the unsecured cash portion as well as the fixed, collateralized asset. So we can do rental properties, up to 30 years now.
Great information. Qualifications, what are they?
Excellent. Let me kind of do it in reverse order. On the unsecured cash loans, they're more of a standard underwrite, so credit score matters. income, debt-to-income ratios, things like that. Not quite like doing a mortgage, et cetera, but those are requirements in that. But again, they're more liberal than they would be, surprisingly, even though it's unsecured debt, than some of the bigger asset-backed stuff.
I see.
And in that space, we're having tremendous success. We're getting people qualified anywhere from $60,000 to $350,000 inside 30, 40 days.
Wow.
On the unsecured business lines of credit, that's a little bit different. It's first of all, you have to have a business. These aren't unsecured personal lines; it's business, so there has to be an entity. Number two, credit. But here's what's going to sound weird and or counterintuitive to people. It is not a score-driven product. It's a blemish-driven product.
Mm-hmm.
So the score doesn't really, as I said, score doesn't. In fact, let me give two quick examples. We had a business owner come in. Their score was 777. Great score, but they had two of what we call the bad blemishes. And so we had to put them in credit optimization.
What would that be? Charge-offs? What kind of bad credit? What are you talking about specifically?
Yeah, see, that's what's also weird about this. And when I say weird, I mean in kind of a fun way. And that is, it varies from client to client or file to file.
I see.
We have what's called good blemishes and bad blemishes.
Okay.
And they vary from client to client. What might be a bad blemish on mine is not considered a bad blemish on yours.
Oh,
that's
I
when
see.
we gather the information, match it up, all the data points to make sure that it works. Oh, here's a good example. We had a lady out of Phoenix, Jeff. She had a contract with the NFL for the Super Bowl several years ago.
Right.
Her scores were in the 640s. Well, they're blemishes.
Right.
She didn't have any of the bad blemishes.
Right.
So she got tens of thousands of dollars in 30 days and fulfilled her contract. So once again, it's not score-driven. The other two requirements are what they call capacity and utilization.
Mm-hmm.
In normal language, that would be called what are the limits of your personal revolving debt, and then how much of it have you used or charged. And we have what's called the sweet spot. So let me put this way. In the absence of the business, and most real estate investors do not have any history or track record with business credit bureaus.
Right.
Specifically Experian. And that's the big dog. It's the Great Dane, TransUnion, Equifax.
Right.
They're like Applehead Chihuahuas. But so if there's no history, then the funding sources will look at the individual to see how they handle their revolving debt. Installment debt, mortgages, car loans don't count. It's just the revolving debt. And so that's what they look at. And if the data points match up, boom, they will extend unsecured business lines of credit to the business, and they're in the business name. And again, tied to the EIN, not a nickel of it shows up on the personal credit report.
Now, I know that this is a revolving line, right, whereby you can continue to use it, pay it back, use it again, pay it back, use it again. There's not an underwrite process for each time you use the money in the line. Could you explain that for us?
Yeah, you're absolutely right. It's a line of credit, and literally, again, let's just simple math: $10,000 limit.
Right.
Draw down $3,000, pay it back. Draw down $7,000, pay it back. Draw down $1,000, and a week later, draw down $4,000. You pay them back. Yeah, we call it forever money.
Right.
It resets every year, and if you've handled the monies wisely, made your payments, you paid things, just done it right, the way we teach everybody after they're a client, then you'll get automatic renewals and automatic limit increases that typically exceed what the normal client is for that funding source.
You said about counseling. I know in certain mortgages, reverse specifically, and certainly the credit counseling in all loans is not necessarily required, but it's encouraged. What kind of counseling do you give your clients? Great
question. We have two things. We've developed, and I don't think we've talked about this before, but
Probably not.
We've developed a process that we're calling constructing a funding-ready credit profile. I joke about my daughter. My daughter, blonde hair, green eyes, wonderful. She has score 782.
Mm-hmm.
Hypothetically, she gets embarrassed. But that score is built on a Kohl's card, a Sephora makeup card, a Victoria's Secret card. I'm not happy about that. You know what I mean? And I can't remember what the other one is. Probably Pottery Barn or something like that.
Right.
Anyway, they're just four. She's not funding ready for business funding.
Right.
That's not a profile. So again, we're trying to construct that funding ready credit profile like a baseball team would construct a lineup.
Right.
And so when we do that, we know that over the course of 2 years, we'll be able to help the client acquire between $500,000 and $2 million of unsecured operating capital. So we do that. That's kind of a step we do. Once they have the capital, we also go through and say, okay, here's how you handle the money when you deploy it. Yeah, what percentages and things like that, so you maximize your new business credit score with the different bureaus. And what happens to help you score higher in the internal institutional algorithms? In other words, every institution, Jeff, maintains its own scoring system,
right,
different from the bureaus, on their experience with that client. And so we go over sort of the rules, the guidelines of how to use the money and maximize your internal score as well.
Could you tell us your phone number? Many people listening right now are saying, "Hey, how do I get in touch with this guy?" Could you do that for us?
You bet. Happy to do that. The phone number is 801, even though we're in Vegas, I'm giving you my cell number, 801-830-6240. And the number is 801-830-6240.
Reed, thanks very much for coming on. Really appreciate the information, and I know the people listening do too. Thanks very much.
Thank you, Jeff. Appreciate being on.
Okay, thank you very much. That's Reed Blake from Business Capital Experts. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's our telephone number here. If you pick up the phone and give us a call, we can help you with questions you're going to have about buying and selling real estate. What's the mortgage interest rate? How come I have so many fees on my deal? This agent's terrible. Who would you recommend? Any of these questions and problems, and they come up on every deal for somebody, I can help you answer them. And if you want to just email me the question, info@malibufunding.net. That's my email address. And Malibu Funding, the company I work for and who sponsors this show, they'll be happy and I'd be happy. And if I can't answer the question, I'll get somebody who can. There are so many different stresses and I guess reasons for hating the business of real estate. I wanted to bring back to the show this week Dr. Jeannie Bertoli, who's been on and talked about not only the stresses of many different aspects of real estate, but she's also an investor and a landlord herself, so she brings a personal aspect to this. Dr. Bertoli, how are you today?
Hey, Jeff. Thank you so much for having me back. I'm thrilled to be here.
Thank you very much. And as you heard in my intro for this segment, we are in, I guess, just about summertime, and we're looking at a lot of people who have to move, new school systems for kids, jobs, all kinds of things that go on. And as you personally know from experience, that means that people are moving if you own property, which brings its own stresses. Tell us a little bit about how you handle all that.
Right. So first of all, I completely agree with you. This is a year of transition. I'm sure everybody has noticed, all your listeners know, you're seeing people are getting sick, people are moving, people are shifting, and so it's a lot for us each to cope with in our lives. And so what I think is really important for everybody to remember is to have something that grounds you, some value system, whether it's stay calm, everything will pass, or people who are more spiritual to say, I believe that everything that shows up in my life is for my best interest, or God will get me through. Whatever it is, you've got to get through it.
Yep. I don't know if you had occasion to watch any of the Democratic debates, but there's a few people there, and the reason I bring this up is because you want to anchor yourself to somebody who looks like they're also grounded, who looks like they can help in a stressful situation. And a couple of the candidates stood out, and I noticed that. And some were flailing and seemed to be lost. In situations like in a real estate deal or when somebody's got to move from one place to another place, hanging on to those individuals who make you even more crazy is probably not the thing to do, right?
No, that's right. You want to find the people that really bring that calm, that through line of, hon, everything's going to be all right. Whether that's your mother, your sister, your spouse, doesn't matter. You want someone who's going to be there, because we all know that while the immediacy of that is stressful, things do calm down within a few months,
Right.
no matter what the stress is.
No, I agree with that. And the stress itself coming from real estate is based on the unknown, right? I mean, people just don't know what's happening.
Absolutely. As you know, Jeff, I have 6 properties that I rent.
Yep.
Five turning over this year, and the stress that I feel is, oh my gosh, I need a new tenant.
Right.
Especially for that one super expensive place that I have in Washington, D.C. If I go a month without rent, that's $2,500.
Oh, yeah, that's a big number.
It's no joke.
Mm-hmm.
And it is stressful, just like you said, the unknown. What's going to happen now?
And how do you come up with a plan of action, or like you say, do you just have faith that it's going to happen, or this is supposed to be or something good will come? I mean, it all depends on your own value system, I guess is what you're saying.
It's true. In my case, what I do, to be completely transparent, is that I've been doing this for many years. I have stressed myself out. I've gotten quite anxious, quite attached to, I need this, and it never helped, and I don't think it ever worked. So I believe in the tenants, I believe in the process, I advertise, and then I just say, you know what, I really believe that what's going to happen is just fine. And I really believe that. So at first it was something aspirational that I hoped to believe, but this many years later, even with 5 turnovers in 3 months, I'm just like, you know what, it's going to be just, every time I get anxious, it's going to be just fine. This is going to be over soon, and you'll be laughing at yourself if you got yourself anxious for no reason.
Now, you have properties in several different cities.
Yes.
And I know that there are a number of real estate gurus who want to corral people and say, hey, look, we can buy properties in Muncie, Indiana, and Biloxi, Mississippi, and we've got the whole process there. How did you come about wanting to do that, and why did you choose these different cities that you have properties in?
So first of all, I've had people approach me just like you just described, and the fact is I'm not that trusting of a person.
Right.
So I'm not going to be just handing somebody my money, and just because they make some promises, it's just not my personality to be trusting like that.
Right.
So I bought my place in Washington, D.C. because I lived there, and I bought it to be my personal home. And then I didn't sell it when I left. And then I lived in St. Louis, bought those 5 properties, and then I left those cities. So now I live in St. Petersburg, Florida, and I own my place, and I'm considering buying another place here. So it started out to me as places that I've lived, but I can tell you that in my plan, as I look forward, I do think that I will probably sell the places in St. Louis and buy another place or 2 locally, because managing all those properties, all those warranty programs, all those HOAs, everything from a distance is cumbersome.
Yeah. And do you hire a management company, or do you do it all yourself and call the repair people and do all that from a distance?
So what I did was I hired one of my tenants to do a sort of off-the-books kind of property management.
I see.
It's not off the books, but
No.
it's just, she's not a professional property manager, but she lives in the building. They're all in the same building. And then I got a warranty company. I use AHS. She just calls AHS. They come in. She oversees the repairs, but she knows exactly who to call. So I've set up these systems.
Right. American Home Shield, that's AHS. They're one of the biggest. They've been around for a long, long time. Very reputable company.
They're pretty good.
Yeah, I like them too. So that's the plan. And buying and selling, that doesn't frighten you anymore at all, does it?
It doesn't.
Right.
It doesn't. Like you were talking about the different obstacles that come when you buy and you deal with this or that, and that's all true. There are all these little hassles, but it's for a very brief period of time.
Right.
So you just kind of plug through it, right? So you deal with somebody like you know they're going to ask you for all these documents, and something's going to happen, and something else is going to happen, and you just sort of ride the wave.
Right.
And it's not that big of a deal at the end of the day, because you have to keep your eye on the goal. I had to keep my eye on the goal. And I wanted a home, or I wanted a retirement home, or I wanted an investment property.
Right.
And yeah, I do this on my own. Where I talked to somebody the other day who has 600 properties.
Wow.
That's just not my speed.
That's a lot.
My speed is to have a handful that I can manage / control the management of myself.
Now, you're an author, obviously. Book coming out this spring? Summer? Fall?
You know, I just finished editing a book that I'm super excited about. It's called Ending Divorce Trauma for Kids, the
Right.
20 Crucial Do's and Don'ts for Parenting Through Divorce. I'm all about fathers and father-child relationships after divorce, and we need our dads to come back and reclaim kids in a super responsible and engaged way. And so I'm excited to tell you that I have that coming out.
Oh, that's a very good book, a good topic. I know that personally, I believe in, fathers being as invested as mothers. I know a lot of times that isn't the case, especially in a divorce. So
But I also believe that they've been diminished by society and the way they were raised. And so and I believe society's ready and judges are ready, and we don't need fathers to come back with an attitude and with an arrogance. We need them to come back with an honorable, self-righteousness and honorable way of being a father and engaging as a co-parent. So I'm behind you, Dad.
Dr. Bertoli, thanks for coming on the show. That was a very quick 10 minutes, and I'm sorry that we're running out of time. Do you have a telephone number, a way for somebody to get in touch with you if they wanted to talk to you about all of these issues that you talked about today on the show?
Yes, first of all, it's always too short when I talk to you, Jeff.
Right, thank you.
My,
That's very sweet.
My website is drbertoli.com. That's DRBERTOLI.com. Come find me.
Thank you very much, Dr. Bertoli, and have a terrific rest of your day.
Thank you. Have a great summer.
You too. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929, our telephone number here at the studio. If you'd like a question answered, if you want to ask me or give some advice or yell at me about the show, please do so. Give us a call, or you can actually save that number and call me later and do that on my voicemail. I'm Jeff Barton, as I said, host of the Real Estate Voice, and I really appreciate you all tuning in each and every week. If you'd like to reach us, we have an email, info@malibufunding.net. I've got a Twitter account at Jeff6493, and you can reach me there or be one of my members and get my daily musings. What we do on Twitter is we put out a mortgage minute, and it's a minute's worth of advice or information about whatever the rates are, things like that can help you, and it's only about 45 seconds to 60 seconds long. A very good thing for Twitter, and I've had a lot of success with that, so I just wanted to blast that out and let people know that that's exactly where you can get the show in minute form. How about that? What do you think of that, Daryl?
That's a darn good idea.
Yeah, it's a darn good idea.
People like minute rice, minute oatmeal.
Anything you can get done quickly. Okay, so we talked earlier in the show about the rates, and we had some great guests on, and I really appreciate all the guests that come on each and every week. I know it's an unpaid, unsolicited thing that they spend time giving back really to everybody in the listening audience to let them know that we're not just carpetbaggers here trying to get the most in every deal that we can. We're really out there trying to help people in housing. When you think about it, when you think about the major problems in the U.S., we talk about homeless people, right? What does that really mean? It means people don't have a house, okay? It really is as simple as that. And we're not building enough houses. We're 1 million houses short every year. You think about the amount of people that are outside, sleeping in tents, on the sidewalk, in any city in America, maybe 1 million people, maybe 3 million people. But if there were housing available, it would certainly bring dignity back to the lives of those people we're trying to help. Anyway, this isn't a preacher-type show, but at the same time, this is what we do when we lend money. When we try to figure out if somebody is capable of repaying a loan, we want to get them a loan. The lender wants to get them a loan. Yes, there are greedy and very selfish people in the business, but most people in the business really just want to help you get a house so that you're realizing what a lot of us, me included, have done over the last 30 to 35 years, which is own a home, build equity in our home, and be able to either use that through a reverse mortgage to be able to live comfortably through your retirement years, or to be able to leave it to your children. This is how wealth is passed down. 99 or pretty close to that percent of people in America who are millionaires did it through real estate. And the only way you can do that is if you own real estate, and the only way you can do that is if you get a loan. So this is what we try to do here with my company, Malibu Funding, company I work for. They're great people, and trying to do that each and every day, each and every week, trying to escape any sort of situations that we might get into if, in fact, we have bad people working for us. We get rid of them immediately, as most of the industry does. As a matter of fact, like driving down the street, you can do something stupid once, maybe twice, but by the third or fourth time, there's going to be a cruiser right behind you. Well, that's kind of how it is in the loan business. I know that there are many people out there who think that they are smarter than the people who are lending you the money, but please, what we're trying to do is keep it clean, keep it straightforward, so that the next person who isn't like that can get a loan. And really, that's what it is all about here at our show, and hopefully we bring that to you. Pending home sales set stage for solid summer sales. Okay, what does that mean? Each and every month, we have a report out by NAR. There's a guy over there, YUN. He's a chief economist for them. There are a number of other people. I know CoreLogic is one of them. There's certainly statistical evidence that the housing market is picking up as the rates have dropped and as inventory has remained steady. It's not high. As I said earlier in the show, we have 1 million fewer houses than we currently need in the marketplace. So if you're a builder, if you're somebody out there who's thinking about doing it, and that's a good question. Why has that happened, Daryl? Do you know? I mean, in terms of why don't we have more builders in the industry? It's just a question to see if you knew.
Well, I mean, water rises to its level, right? I mean, things even out. And
right.
If you build too many homes, which we have done in the past, people go out of business. The builders go out of business, and then people are trying to jump back in.
Right, that is what happened. It happened in the 80s. It certainly happened during the crash in 2008. And so I spent some time, and this show is carried out in Las Vegas as well. I spent some time there recently in the last week or so, and what I found was they're building, but they're not building to the level they were in 2004, 5, and 6. And the reason for that is, as Daryl says, hey, look, they don't want to get burned.
They're scared.
They're scared. Who isn't scared? I mean, if you look around, and depending on who you... Oh, by the way, did you see that Democratic debate?
I didn't know that.
Oh, my gosh. You got to watch these things. They're unbelievably entertaining. They're just...
I'll watch the replay sometime this weekend, but it's been a busy week.
Yeah, it has. Yeah, I agree with that. But I did watch it. It replaced our normal show that we watch every night on Netflix. And we sat down and we watched the debate. There are some people that you've never heard of, and you're going, who is that person?
And you probably never will again.
And, well, I think that's part of it. I think a lot of them are vying for that VP spot, that plum, do-nothing kind of spot where you're primed for the next, like Biden. I mean, he was VP for, 2 terms under Obama.
Nobody knew that.
No, well, you put it on his resume, and so anyway, we're gonna watch these debates again, and I enjoy them. I enjoy the political give and take because, as I was saying about what's going on in the economy, this trade war with China, it's really about the political, I guess, leadership in the country, whether you think that's a good idea, whether you think that's not a good idea. Certainly different administrations do different things, but because of the trade war, you have less money in your pocket to spend on a mortgage. That's evident. So the main thing about trying to figure out for you personally, if you want to buy a house, San Bernardino, you're out there in Rancho, you're in some of these communities where the median price has really risen to $300,000, $400,000, you want to have every dollar you can put towards the mortgage so that you can afford to go out there and buy that house you want to buy. So in this article by Jan Swanson, she talks about how what we have from this year versus last year is we have, let's see, the price is stable or stabilized, about 3 to 3.5% going up each and every year. Based on this year to last year's number in comparison, but it also says, let's see, increase in pending sales in May, and that means a good thing, of 4%. Okay, so this is what we're talking about. The demand is not what it was, but it's not bad. 4% is okay if you're looking at it that way. Okay, there's a list here of communities which are the best buy for those people who live and work in those communities. And what do I mean by that? Quickly, I'll tell you. There's a median income for each city in America, meaning like in Phoenix, it's different than New York, but they can be compared to the affordability of the house they're going to buy. So if you live in a town where the median income is $100,000 and the cost of the house is $300,000, well, that is a number, and they equate that and they rank them in terms of the affordability of the city based on how much money you're going to make in that city. So we'll just go to the top 5 because I think why not, okay? So given that the formula, what do you think? And some of these cities surprise me. What do you think of the top affordable cities based on the income you're going to make in that city?
One of them is going to be in North or South Carolina.
You know, it's funny you say that. None of the Carolinas, none of these cheaper homes. For instance, number 4 is St. Louis, meaning the money you make in St. Louis makes it the 4th best buy in America in terms of affordability for the house.
Interesting.
Yeah, very interesting. Number 3, you'll never guess this. It's in California.
It's not San Francisco.
No, it is not San Francisco. It's San Diego.
San Diego's a pretty place. Nice place.
It's a great place, but the money you
But I
make
thought it
there,
was unaffordable housing.
it makes it affordable, more affordable than other cities, and you can't ask for a better place to live. So if you want a new job and you want to work, go to San Diego. Number 2 is Portland, and number 1 is Seattle.
A lot of people are going up there.
Absolutely.
A lot of people.
Yeah, and because if you're in the high-tech world making good money, it makes that city very affordable, number 1.
Yeah, you go up there and they ask you where you're from and when you're going back.
I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks for tuning in, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.